Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, August 11th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll see right here in the previous session, price rallied here right out of the gate, but found resistance at recent highs. The rejection at those highs was pretty strong. Very, very strong rejection at the 45.40, 45.45 zone. And then price dropped into basically the end of the day, got a new low down there and traded back down within the boundaries of this narrow range over the last 5 or 6 sessions. Now here heading into the RTH Open, we do have PPI, core PPI data coming out prior to the RTH Open. That's going to be released here very soon. Thus, the reason we have a very narrow range here heading into the rest of the session here, just 39% of average as the market awaits PPI data. Now keep in mind the previous session's midpoint, 45.09, will be very important. If price pushes through that area easily, it's a trading range move back to the top of the range where we could see another drop back within the range. Likewise, if we push down a bit through the bottom, bulls have been defending for a return back up. We haven't really gotten a breakout from this range. We've kept a downtrending profile. But one thing to keep in mind is this high right here, very, very strong rejection in the previous session. And it makes for a very good breakout point ahead. So if at some point over the next several days we do see a push through that pivot, it will open up a move to recent highs and perhaps through those highs. That's how good of a pivot that is. So keep an eye on that pivot here as we move forward. As of right now, this market continues to find fail to find a way to push back above that previous mid. And if it continues to do, that, basically a downside move to the previous month's midpoint is in play. So a failure to find acceptance above the previous month's midpoint opens the door to more weakness into the previous month's low up ahead. So keep an eye on that level as well. Now, if we take a look here at the NQ, you'll notice the NQ right here with the similar rejection in the previous session. That was a strong rejection. As soon as price reached those levels above the previous session's high, a big time rejection came into play and it turned prices right back down, keeping the downtrend intact here ever since that strong Thursday high. We've seen weakness here play out ever since price pushed through the previous month's midpoint and the FOMC. We've had a bearish trend, so we haven't really been able to see much in the way of a bullish move lately. We are coming into the previous month's low price, so again, that's going to be an area to watch here. As a bounce could be seen back to the mid from there, but a failure here and you start opening up more downside ahead. So at some point we're going to keep an eye on this previous month's or previous pivot here, previous month's low. If we get a rejection, that could turn things up through that pivot and open things up to the upside. So again, keeping an eye on that pivot from yesterday's session, but looking for more weakness here in the near term to see what this edge is about. If we keep an eye here on crude oil, this one right here has had a significant reaction to prices above 84. We're back below the 83.50 level. This was a huge outside reversal, but by the end of the day pushed back above the lows just barely. So right now, again, very big time rejection here, but every time we've seen selling pressure, this market has been able to shake it off. This was a huge move down here in one day, and in the very next day, big time push up. Huge move down here, and in the same day pushed it right back up. This was a big day down, and already here bouncing off the 8-period average and pushing back into the previous session's range. But at some point here, this edge might come into play. So keep an eye on that 83.52 level right there. A failure to push beyond that level here today could be an early indication of weakness that could take us down to retest 80.5, and that 80 level through this level starts to open up more weakness ahead. We've seen it before, and if you go back in time over here, how the market responded here, how it's responded over here over time is very similar to what could happen over here as well. So again, failure to get back above that 83.52, and that's the earliest signs that maybe we start to turn back down within this larger trading range. All right, taking a look here at gold futures. Now, gold here failing to hold the 1960 level, big time level. This was a huge rejection here that developed a holding pattern in the previous session, or the next session, but beyond that. And then right here, that was a huge meltdown that started here, especially through 1960. And is that going to be a transition lower? Are we going to see more weakness up ahead? So far, this market again, after that strong high, has found a way to turn back down. This was a big shakeout back up, and then right here on that edge, it just couldn't get beyond it, and we've melted back down, back through the previous session's midpoint. And we could easily start making a move back toward recent lows. So again, to push back below 1960 is big. You still have a fuzzy zone in here, 1940, 1950, 1960. All this area has been a fuzzy area of support over time. But to fail through the midpoint, to see a huge rejection back above 2000, we could be looking at a continuation back toward recent lows up ahead. Although gold has been fairly range bound overall, choppy, and hasn't really found a whole lot of directional conviction lately. It's been mostly flat if you just kind of look at the whole complete picture here. We had directional bearishness here until it failed here. So coming back to that level is very important. 1940 still in play, but a very clear downward bias right now for gold. Taking a look lastly here at the YM. You'll notice here the YM perhaps is the most intriguing of all of these markets right now. We have a very clear rounded behavior here that's developed. We have a very narrow range that is developed here as well. This is a 17-day developing range. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days complete. Today's the 18th, but it's developing. So 17 days complete, and that forecasts a range of about 1,500 to 2,000 points of expansion here over the course of the next 17 days. So basically a 3-week move that could transpire here of 1,500 to 2,000 points once we get out of this range. Now in the previous session, that was a super huge rejection day. Price pushed up through those highs, and again, a strong reaction at these highs. That was a big time rejection. It happened across the board. 15.6 was the big level there, and back down we go. So is this the first indication that maybe we break down? And what we've talked about before is through 35K could open up a move that takes us as deep as 33.8. So that's going to be a huge move. That's 1,200 points right there by itself. Again, 1,500 to 2,000 could be ahead. So watching this range here for expansion at some point. We're not quite there right now. We're still in the range, and technically speaking, when you're in the range like this, you can continue to go back and forth for a bit. But once you do get that expansion, 35K at the bottom end, 35.8 at the top end, there's going to be the potential for some big time movement here at some point. So keeping an eye on the YM as it approaches CPI data here very, very shortly. All right, that is it for now. We'll see how this plays out heading into the weekend. Good luck, trade well. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.